I'd be curious to your take on some of the projects you're most interested in now. We've had Thorchain on the program to kind of talk about what they're trying to do. Luna, we've discussed as they've now crossed and hit a new record high in terms of trying to build a decentralized stablecoin. I mean, if you're thinking about building something that is truly decentralized and detached from, I guess, the old way of doing things and the old way of banking, I mean, what do you see as maybe the big opportunities out there beyond just price, but the problems they're solving?
Yeah, I mean, I think at its core, probably the biggest innovation are these decentralized exchanges, which are now passing traditional exchanges in volume. And you're starting to see more complex products like DYDX, which are allowing for people to trade in a way that people might be used to from traditional markets in derivatives and futures, and building these more complex products. But I also think it's interesting what's happening on other chains like Avalanche and Solana, where fees are a lot lower to make a single transaction, which allows people to build more and more complex projects. And you're starting to see some of those come out as well.
And how low Bitcoin could really go. Well, to break this down for us, we're joined by Emily Parker, Executive Director of Global Content at CoinDesk. Always good to have you. So I want to start with something that your average person probably hasn't heard of, the Terra project and its two tokens, UST and Luna. A lot of people hadn't heard of them until crypto's last tumble. What do investors need to know about this recent plummet and any links it has to what we're seeing with Bitcoin's movement?
So I have never seen anything like this. This is the collapse of what was the third largest stablecoin, and it's basically been collapsing in real time. And yeah, it's pretty amazing. So this is something that there have been a lot of concerns about stablecoins, including from regulators and lawmakers. You know, the question is stablecoin really stable? Because the whole idea is that a stablecoin UST is supposed to be equal to $1. It has fallen way off the dollar peg and is bringing down a lot of people with it. Now, you have a lot of people, there's a lot of comments, really sad comments on Twitter and on Reddit, people talking about losing their life savings. So a lot of people are really being hurt by this. I think this could pave the way for stablecoin regulation to come sooner than expected. And as for Bitcoin, you know, Bitcoin plays a role in this as well, because Bitcoin was used as a way to try to shore up the price or shore up the peg. That didn't really succeed. Right now, we're not seeing as dramatic as an impact on Bitcoin as many would have expected. But you know, this stablecoin is such a big part of the crypto market that, you know, its collapse could have implications across the board.
Emily, we've got to talk about Coinbase. It's one of the big stories in crypto today. Shares there off nearly 30%. They just reported a weak quarter. I don't think it took many people by surprise, given that volatility that you were just talking about in Bitcoin and a number of other crypto trades. But what does this mean for a name like Coinbase when the market is so volatile? You see investors willing to dump crypto as soon as they get nervous. What does this mean for this space and some of these larger companies here?
Sure. So this was a concern from as early as when Coinbase went public. Coinbase's fate is just tied very directly to a very volatile industry. So Coinbase had reported relatively unimpressive earnings, and this was largely because of fall in trading volumes. And Coinbase makes a lot of its money off of transaction fees. And so when you have low trading volumes, you're not going to have high transaction fees. Now, Coinbase has been trying to diversify with like an NFT platform, which again, doesn't seem to be as exciting as some people had anticipated. But yeah, I mean, we're also seeing Coinbase's stock go down. So yeah, I mean, I think its fate is very, very much tied to fluctuations in the cryptocurrency market.
So we've got Luna, we've got Coinbase, the price of Bitcoin falling below 29, and yet record venture funding in the quarter. In the U.S. alone, $5.8 billion raised. Where's the disconnect there?
That's a great question. So yeah, I mean, look, the cryptocurrency market is a roller coaster, and what's happening right now is not crypto specific. As you can see, the larger market is taking a beating as well. So a lot of this has to do with global macro trends and not cryptocurrency specifically. So, you know, I mean, there are definitely some people who will say, well, I'm going to keep building, I'm going to keep investing in these big projects. But yeah, I mean, there's been a lot of froth in cryptocurrency funding, and I think there is reason to be concerned that some of these projects are not going to make it.
And we have heard one of our guests saying we're already in the middle of a crypto winter. Do you agree with that? And is it going to get worse before it gets better?
So I think the way to look at it is that crypto's fate, for better or worse, is now very much linked to the overall market. And that's what we've been seeing. We've been seeing quite a strong correlation between cryptocurrency markets and the stock market. So basically, that's just a question about what's going to happen in the world. I mean, what's impacting the stock market? It looks like partly concerns over inflation, partly concerns over higher interest rates, partly just global macro instability, supply chain issues in China, and cryptocurrency is moving largely in tandem with these trends. So I think, that's really the question. It's like, what's going to happen in the larger market? And then that seems to trickle down to Bitcoin as well.
Emily, another piece of the puzzle here where it still remains to be seen what's going to happen is when it comes to regulations. Concerns here in the U.S. on Coinbase's call today mentioning the concerns out of India, the fact that Coinbase had to halt their services in India just a few days after they launched because of pressure from the Reserve Bank of India. When you have a massive outlying factor like this in regulation, we don't really know what is going to come of it. How much influence do you see that having over the price of some of these cryptos, at least in the short term?
Yes, I mean, we've seen in the past that regulation can definitely have an impact on the crypto market. But as we've just seen with this whole UST debacle, I mean, regulation is coming. Stablecoin regulation is coming. I mean, this seems very, very clear. And it's not necessarily a bad thing, because what's worse for the crypto market? Crypto regulation or having a lot of people lose their savings because of a failed project. So, I guess it just depends on the type of regulation. But I think in the United States, for example, the uncertainty about regulation and a lack of clarity about regulation has been worse for the crypto market than regulation itself. So I think there's actually a chance that regulation could have some kind of calming effect, because as we all know, uncertainty is not good for financial markets.
Okay, coming full circle to where Rochelle started this segment, how low can Bitcoin go? Infants are old enough to remember there was once talk of Bitcoin 100K. That seems all but forgotten. And how good does Elizabeth Warren and the Labor Department look right now for criticizing Fidelity for allowing 401ks in their retirement funds?
It really just depends on what your outlook is, right? I mean, of course, a lot of people are sort of drawing these analogies saying like, okay, if you invested in Bitcoin at this time, you'd be really down. But, Bitcoin has been steadily going up over the years, right? And if you go back to like March of 2020, I think Bitcoin dipped to something around 3,000, at that time. So if you invested at that time, you would have made quite a lot of money off of Bitcoin, right? So it really just depends on your vantage point. I mean, I think Bitcoin is very much a long-term narrative. I mean, that's at least how I see it, right? I mean, Bitcoin is a long-term play. So if you're in it for the long term, it's possible that this may just be a blip, right? But if you're, it really just depends on what your time horizon is.
Of course, an estimated 40% of crypto holders are underwater momentarily. Tough to sell them on that.
New and Bitcoin prices are still trading lower, down below $29,000. And those prices also fell to their lowest level since December 2020 today as the crypto sell-off continues. Now, meanwhile, prices of Ethereum are also trending lower, down 10% to about $1,900 as well. And prices for the altcoin Solana also under pressure. Now, all of this, of course, is coming as the collapse in prices of Luna, the sister cryptocurrency of the stablecoin Terra USD, continues to reverberate across the broader crypto ecosystem. Now, Luna had peaked at just over $100 earlier this year. It's now cratered by more than 99%.
Yahoo Finance's David Hollerith has all the details. And David, we're talking about Luna 2.0 because 1.0 clearly did not work. What's the thinking with this one?
That's right, Jared. So Luna 2.0, or I guess we'll go back sort of to the ecosystem, the Terra ecosystem, which included originally the UST, which was the stable coin for Terra, and then also the Luna token, which was sort of its sister token. They had a relationship where, they sort of maintained each other's value in a way. This new Terra 2.0 ecosystem will include a Luna 2.0. Notably, it'll just run under the same ticker name. And the whole idea of this ecosystem is basically to salvage what has been created, like the other financial apps on the blockchain, without the original stablecoin, which obviously has collapsed. Now, the approval or the proposal was approved by vote and is launching today. And I think the question that a lot of people have in the scenario is sort of, what's going on here? Why is the community trying to relaunch after such a failed project? This seems like a terrible idea.
And who's going to buy the thing, David? I mean,
exactly.
I don't understand.
Yeah, and Julie, we have two things going on here. One is that there's an opportunity. People who owned the original Luna token before the collapse are going to get new Luna tokens. So if those go up in value, they potentially can reap some of their losses back. Now that's still obviously it circles around the question, which is who does buy this? Who's on the other side of this trade? A number of exchanges have sort of listed Luna, and that sort of opens the liquidity for it. But the question is a big one, and it kind of ultimately comes down to community. There's a question that maybe there's a lot of developers who still want to build in the Terra ecosystem, and long term they still want to buy those tokens, so they might increase the price. But it seems like a situation that's not really meant to succeed, just as far as like what we've seen in the last month. So an interesting development, but at the very least, I think it's best to think about this as a way to sort of salvage the technology for the people who have been trying to build on it.
Yeah, I think it's still too late for Mike Novogratz's tattoo, though, of Luna, which he got as a big bull initially of that.
It's a perfect cover if you're shorting, if you think about it. I'm not just throwing that out there.
Okay.
Yeah,
Jared thinks like a trader, of course.
Hedge fund guy.
David, I want to ask you about the other stablecoins as well. We had the chance to catch up with the head of Circle recently, who sort of said this positioned them better than the algorithmically backed coins. You had the chance to catch up with Tether, which has actually been seeing some outflows.
Yeah, at the beginning of this week, sort of, it was noted that since May 11th, which was sort of when so there's Terra, the algorithmic stablecoin, and then Tether, and that's obviously a point of confusion for a lot of people. But Tether is the largest stablecoin. It's the most traded cryptocurrency. And on May 11th, between May 11th and basically Sunday, it saw outflows of about $10 billion. And I got to speak to Tether's CTO yesterday in between two conferences he was attending. The difference that he has hit on is very similar to Circle, which is those two cryptocurrencies, which are the largest in the sector, they're both managed by reserve assets as opposed to sort of an algorithmic model. Now, that being said, Circle and Tether are both fairly different in how they control their reserve assets. Tether for years has sort of had a history of being scrutinized by critics and regulators for, not being transparent about its reserves. Before it started publishing basically the markup of its reserves, it had said originally that it backed it with 1-to-1 with cash. And once they started publishing their reserves, they showed that wasn't actually the case. They cover a couple other higher risk assets. And obviously, if you're a stablecoin issuer and you're sort of balancing your outflows of a currency with your reserves, you want to have things as close to cash as possible or as safe as possible, like U.S. Treasury bills, so that if they need to, they can sort of sell it. It has the most liquidity possible. So they had millions of dollars in fines from U.S. regulators for not being transparent about that. But since then, they have, I will say, taken down the amount of commercial paper they hold in reserves, and that's continued to see a drop. But they publish their audits of their reserves once a quarter, so the most recent one has been in March. So there's still a lot of calls in the community for people to get a more updated, real-time amount of the reserves. So again, back when the market saw such a drawdown in the middle of May, Tether, it did slip below its $1 peg to as low briefly for 95 cents. And since then, it has recovered, and it actually looks like it's gotten sort of back up there today. But the question all sort of depends on, not only the confidence for investors in this asset, but also, how quickly they can redeem withdrawals when they come. And the key part of the interview that the CTO brought up, Paulo, was that essentially they have proved through this environment that they can redeem withdrawals pretty quickly.
All right, we're watching crypto. Bitcoin prices jumping, hovering around $31,000, and our next guest thinks it will go a lot higher. Joining us now is BitBoy crypto founder Ben Armstrong. Ben, good to see you. Let's start with the crash that we've seen in recent weeks, in particular Terra Luna, $40 billion wiped out in what was a so-called stablecoin. What did we learn from that?
Well, one thing we learned is when it comes to stablecoins, algorithmic stablecoins, which are tied to the tokenomics and supply of the coin, they're dangerous. And we have not seen one work yet. And we haven't seen one that's been beneficial for people to put money into. I mean, everybody that had money in Terra Luna or in the stablecoin UST, they pretty much lost everything. And that's why it's great to be diversified, so one coin can't destroy your portfolio. But it was really unprecedented with what we saw. I think something else we can look at here is to say that, well, if this can happen to Terra Luna, what vulnerabilities do other crypto projects have? And I think really taking a hard look at what's in your portfolio and trying to figure out what may be too speculative, I think it's good practice to go through.
So, Ben, then we have Terra Luna 2.0. Would you be avoiding that then at this point?
Yeah, for sure. Yeah, I would run very far away from anything that has the Terra name attached to it. There's just not going to be the confidence in it again. Because how safe can someone feel in Terra Luna? Even if the price goes up, it's not a coin that you will feel comfortable in because of what's happened. We know Do Kwon. I don't think he's a bad guy. I don't think this was intentional, but I think he's shown that he's been egotistical to a point to where even though criticisms of his project were brought up, he just assumed everything would be okay. And the fact is, whether this was intentional by BlackRock and Citadel or not, if there was a vulnerability, it was always going to be exploited. So I think that he really made a lot of mistakes. He got his head a little bit too big. He became a one-man marketing machine. And, I think anytime we're letting the hype drive, the price, we get into dangerous territory.
Ben, as I'm just trying to learn about this crypto space, it's being drilled into my head. Is it a hedge against inflation? Then in the face of inflation, $1 trillion in crypto wiped out in 6 weeks, $250 billion in 24 hours. It is clearly not a hedge against inflation. What is it?
Well, I think it depends on how you look at it, because if you look at the beginning of Bitcoin to now, like you could make an argument it definitely is. Right now, we're at the point in Bitcoin's 4-year cycle to where we should be in a bear market and prices should be going down. I mean, historically, points to a $10,000 Bitcoin. Now, I don't know if we're going to get that low, but I think definitely challenging the lower 20s will be something that, we will do here probably between now and November. And I think that, when it comes to talking about is Bitcoin a hedge, I mean, look, if you go look at the price of gold, if there's a collapse or a recession, the price of gold generally tends to drop as well. So I don't think there's an asset out there that is 100% inflation proof, that's 100% a hedge. We're always going to see things move with the overall markets. But I think what's really important to understand with Bitcoin is it showed an ability to outperform the rest of the market for a considerable part of its life. And that is cyclical. So we see it every 4 years. Right now, Bitcoin should be dropping. 2024, end of 2024, we should see Bitcoin, probably hitting all-time highs again, somewhere around that time. So it's going to be a long road to get there. But Bitcoin tends to bounce back further and harder than other assets coming out of the crash. So it's definitely something to watch as this recession ends at some point, maybe 12 to 18 months. Watch for Bitcoin to bounce back much harder.
So, Ben, you're even more bullish than that on Bitcoin, because there was a recent tweet that you put out that I want to pull up if we can. Okay. And you said that Bitcoin is going to hit $1 million per coin by 2023. You went on to say that Bitcoin would become the world reserve currency around 2075, and that Ether is going to pass Bitcoin in market cap by 2030. What needs to happen in order for us? Let's just start with number one. In order for Bitcoin to hit $1 million per coin, what needs to happen?
Well, Bitcoin just needs to continue on the process it's on, on the journey it's on, which is every 4 years we get the production of Bitcoin cut literally in half. We're going to see more adoption of Bitcoin. But not necessarily adoption as like legal tender. We're going to see more regulation that's Bitcoin friendly, I believe. The talk of Bitcoin is, against the environment. That's going to fade away as it actually creates a lot more renewable energy sources. I was just with a Bitcoin mining company that used to be an environmental company. They believe that Bitcoin's actually the key to the future of the environment, which is quite interesting. And what you have to understand is, as that price, or as the circulation of Bitcoin, the daily supply is being cut in half every 4 years, that has a huge compound effect on the market. It causes supply shock with the miners. And as long as that keeps happening, the price of Bitcoin will keep going up because it's just simple supply and demand. We have less incoming supply, and we already seen institutional demand. When retail demand gets really high, that's when we see price spikes. So I think as long as we can see, continue to see those things happen, then Bitcoin's going to continue up to a point. 2036 for Bitcoin to hit 1 million actually may be conservative. Cathie Wood says by 2030, but I'd rather be on the conservative side of it. I just don't see any way that Bitcoin does not hit 7 figures, in the next 15 years.
Ben, when the ordinary investor Googles crypto and Bitcoin, they find dozens, hundreds, thousands of scams, frauds, and an article in the Wall Street Journal about rampant insider trading in the crypto space. What do you tell that investor?
Well, number one, what I'd say, where do you think insider trading started? Number one, you can't really say insider trading without there being regulation. I think insider trading in crypto today, it's more of a moral and ethical dilemma. Like, do you do it? Do you not? We certainly would never participate in that because we believe in doing things morally and ethically. From a legal standpoint, we don't really have the regulation to say what insider trading is or is not in security or in crypto. They can't even decide what a security is. That's why I think a lot of this is on the SEC to actually do their job and come up with a regulatory framework and tell us, what cryptos do you believe are securities? Which ones are not? And I think that'll allow the space to really flourish. But I think whenever you're looking at scams in crypto, you just have to be really careful because there are a lot of scams out there. And I think the things that are the easiest shortcuts to making the most amount of money, those should really be red flags. If you look at Terra with their UST staking, it was 18 to 20% you were earning back on that. That's not really sustainable. If it was 5 or 6%, maybe. 16 to 18% or 20%, that's probably too high. It's probably, I don't want to call it a Ponzi scheme, but those numbers are unsustainable. So I think you just have to look for what's realistic in crypto. And I think when you're looking into coins to invest in, you really need to be looking at the top coins, especially right now in a bear market. It's not time to try to find 100x coins until Bitcoin finds a bottom. Then you might be looking at more speculative assets for the next bull run. But I think as long as you're accumulating what we consider to be blue chips, whether it's XRP, even though they do have an ongoing lawsuit with the SEC, Cardano, Ethereum, Bitcoin, Sandbox, FTT, CRO. Those are coins that we really like for the long term. And we do hold all those coins in our portfolio, but those are ones to really be looking at. You can't start chasing short-term gains in crypto right now.
Much like tech stocks, Bitcoin has been hammered this year, but it too is rallying in recent days, ending last week below the 29,000 mark before spiking up above 31,000. Emily Parker is the managing director of global content at CoinDesk. She joins us now with that and how crypto is actually lifting up the NBA. I want to talk about that in a moment. Nice to see you, Emily. But first, what do you make of the volatility of the crypto market? Is it simply here to stay?
Yes, I think so. I mean, crypto has been pretty much volatile from the beginning. It continues to be volatile. It's been particularly volatile lately. I don't know if it's here to stay forever, but it's here to stay for the short term because we're far from reaching the point where crypto prices are anywhere near predictable because we still don't really know what drives crypto prices. There's a lot of mystery behind what brings Bitcoin up or down.
Well, Emily, speaking of something that's extremely volatile, we got the launch, I should say, of Luna 2.0. The revival of it launched over this weekend, off to a very wild start. What's your takeaway just from the action that we've seen over the last couple of days?
Well, there's no surprise that it's off to a volatile start because it's a wildly controversial project. You have UST, which failed spectacularly, leading a lot of people to lose their life savings. And then shortly thereafter, there's this kind of relaunch. And so, yeah, it's really, really controversial. I think a lot of people think that this shouldn't even exist. And I think there's people who think that maybe lessons weren't properly learned. Now, this is different because it's not actually attached to any kind of stablecoin, but I think there's just questions about like, why is there a Luna 2 to begin with? And, what kind of feature does it have?
BitBoy founder Ben Armstrong told us yesterday to run away fast. Do you agree with that advice?
I mean, I definitely wouldn't invest in it. So, I mean, we just saw basically the collapse of UST, which was one of the most horrible things to happen in the crypto industry in recent memory. I mean, this is just billions of dollars of losses. So many ordinary people whose lives have basically been destroyed by putting their investment into this project, and then shortly thereafter, this kind of the same group basically is putting out a new coin. So yeah, I think there's reasons to be really concerned. I don't think there's been enough reckoning for what just happened to, just move on to the next step.
And Emily, speaking of the fact that so many people lost all of their life savings here, a number of lawsuits, the legal fallout from this, I feel like that is being missed when we're talking about the larger story at play. Where do you see, I guess, how do you see those potential lawsuits here affecting the future of the crypto industry? Do you think it's going to deter some of this type of volatility or maybe some of these new entrants that we've seen over the last several years?
So I don't know what's going to happen on the legal front, but I can tell you that this is really, really bad PR for crypto, right? Because, if we're reading all these stories about ordinary people who lost their life savings and all these people are posting on social media, and some of these stories are legitimately very tragic, whether or not you think they should have invested or not, there's stories that it's not just in the United States, it's all over the world. It's in countries, countries in Latin America, for example, where people are battling high inflation. And, they saw a project with the word stablecoin in it and, had some sort of impression that this was a relatively stable investment. And some of those people, really lost everything. And what's really sad about some of these investors is that, they're not just all chasing greed. Some of them were just, at least according to them, were just trying to buy a home or just trying to, save up for a better future. Now, again, this might not have been the smartest investment, but still what happened to them is very tragic. So I think regulators are definitely looking at these stories and asking, what can we do to prevent this in the future? And I think there's a lot of questions. I mean, stablecoin regulation is clearly coming. We know that. But I don't think regulators know how to regulate algorithmic stablecoins specifically, which is what UST was. So I think this will hasten regulation, but I think it will also cause a lot of people to have a very negative impression of the crypto industry.
The collapse of stablecoin Terra and its sister token Luna, one top regulator is warning that investing in cryptocurrencies is dangerous for investors with modest means. Acting comptroller of the currency, Michael Su, says hype is a serious risk for cryptocurrencies and warns that certain activities within crypto, namely yield farming, could be akin to a Ponzi scheme. He joins me now to discuss these issues and what regulators should do now. Comptroller Su, welcome back to the program. It's great to see you.
Thanks for having me, Jennifer.
So I want to start off the conversation with your reaction to the collapse of Terra Luna. It appears they're trying to resurrect Luna, albeit not that successfully. But there are a lot of question marks about what really happened here. From your viewpoint as a regulator, what do you think caused the run? And should federal regulators be investigating this?
So I think the Terra Luna collapse has revealed a number of things, but I really want to focus on three. The first is stablecoins are not stable. Clearly, to have an $18 billion stablecoin crash so quickly, I think showed that. Second, a lot of the growth in crypto is driven by hype. Part of the reason that Terra was able to grow so quickly, it was hyped, and there were some very attractive yields that were not sustainable put onto it. And third, contagion risk is real. You saw the sell-off lead to both a broader sell-off in the cryptocurrency market generally. I think $500 billion of value was lost in a relatively short period of time. And you saw some pressure on another stable coin, Tether, which is not algorithmic. And Tether briefly depegged. And so I think that really, I think some of these lessons just kind of reveal some fragilities in that space that everyone needs to be really careful about.
Yeah, Comptroller Su, one of the major draws of investing in Terra was depositing it for higher returns, kind of akin to that yield farming, which you've linked to a Ponzi scheme. Do you think that Terra Luna was a Ponzi scheme?
So there was a crypto hedge fund manager who said, if you can't figure out where the yield is coming from, it's probably coming from future bag holders. Those are his words. And I think that is something to kind of bear in mind. There's been a lot of hype, a lot of yield, which I pointed out over a year ago to say, if you where are these yields coming from? You should really understand that. That's very important to protect investors if you're investing in this space, to understand these things. And that's very important to me and to us in the regulatory community, is protecting people. This is big enough now where this is an important thing that we have to pay attention to.
Yeah, and I want to follow up on what you said on contagion. Obviously, there is contagion risk within crypto. We didn't see that spread this time to the traditional financial system. But if there were to be a bigger run, perhaps, how worried are you about this infecting the traditional financial system and the potential for systemic risk?
So we have taken a careful and cautious approach to crypto. As you know, and your listeners know, the OCC supervises national banks. So it's about 1,100 banks, $15 trillion in assets. And our mission is safety, soundness, and fairness. So anything that's done in the national banking system has to be safe, sound, and fair. Can crypto be done in a safe, sound, and fair way? Yes, but banks have to show us. They have to prove it. And so we've taken this approach where if a bank is going to do this, anything in the crypto space, they have to demonstrate to us it's going to be safe, sound, and fair. I think that standard that we've applied has really helped to keep these issues contained within the crypto universe and to not infect the traditional banking system. And I'm proud that I did encourage the FDIC. I sit on the board there to kind of follow in the OCC's footsteps to take that approach to banks in crypto.
So is the best way to protect the banking system from risks to crypto to limit its exposure? And if so, given what's happened, is the OCC less inclined to issue specific special bank charters for financial institutions to engage in crypto?
So our chartering authorities and the standards we use are going to be the same no matter what. So there's a wide range of business models for banks. And so we don't have a one-size-fits-all in terms of that. But in terms of the standards, safety, soundness, fairness, compliance with laws and regs, protecting consumers, all of that is part of the what we evaluate when we look at charters. And we hold all banks to the same standards on that. So we're open. Again, we're open-minded about who wants to get a charter and what they want to do with it. We're going to kick the tires on it to make sure it's safe, sound, and fair.
So that's still open for you guys, just to be clear.
Again, we're open-minded on charters. Now, I think that to be clear, I have prioritized that I am especially sensitive to arbitrage, races to the bottom, and so I want to make sure that the way we exercise our authorities and decisions around charters don't lead to regulatory arbitrage or races to the bottom. And that's another important set of priorities for me.
Comptroller Sue, when we look at the Terra Luna crash, it seems to have elements of what occurred in the financial crisis. People were searching for high returns. They didn't read the fine print. They didn't understand what they were investing in. $40 billion has evaporated. It doesn't seem like we have the luxury of waiting for Congress to act here. Why aren't regulators using your current authorities to write rules now and protect investors?
So there are a lot of discussions taking place right now amongst the regulatory community, me and my peers. As you know, the FSOC has identified kind of the crypto world as something that the Financial Stability Oversight Council, of which I'm a member, and others are paying attention to. The White House put out an executive order, which requires some reports about what's going on out there, what are the risks, how are we going to approach that. In the meantime, there's a lot of coordination amongst the agencies on particular areas where we can focus, and stablecoins has been one of them. There was a President's Working Group report, which also included the OCC and the FDIC, which lays out some objectives. Making stablecoins stable. How do we do that? Ensuring that there's interoperability. Those are really, really important, and we're all working on those now.